a very mixed day. I mean, we've got platinum down, gold doing quite well. Brent crude seems to be rallying, the dollar coming under pressure, the rand, of course, gaining ground today. It's all about the Fed. It's all about midterm elections. What are you seeing on the ground from a volumes perspective?
Oh, absolutely. I think right now what we're seeing is that everybody's staying on the sidelines. You know, the JSE is up slightly today, but I think everybody will be staying on the sidelines until America opens and gives us some kind of direction. And, you know, as you said, it's the Fed decision today regarding quantitative easing, as well as the midterm elections that are going to be announced, or the results that are going to be announced later on today. So yes, it's a very, very interesting day and a start to a very big week, I think, in terms of international markets. Tomorrow we've got the ECB and the BOE rate decisions coming out, and then at the end of the week is the big number, the non-farm payrolls, and that will show the employment in America and where that stands. So yes, very, very big numbers coming out.
Well, in Ntombenhle, some say that a lot has already been priced in. So, you know, we keep saying that markets participants are perhaps sitting on the sidelines this week waiting to see what the Fed is going to say. But it does seem that quite a big amount has been priced in. Do you think we could be disappointed with the money that is going to be pumped into the US economy? Of course, numbers between $500 billion and around $1 trillion has been thrown around.
Yes, I think the market is thinking that 500 billion is fair, and you know, that has a large quantity of that hasn't been priced into the current stock prices. Perhaps you know, when it is confirmed, we'll see some kind of knee-jerk reaction if it is round about that level. But I think the market is also maybe hoping that there'll be about between 800 billion and $1 trillion US dollars pumped into the US Treasuries, and that, you know, it could be a 5-month period in which that they do that, and they're going to be looking more at the mid to long term Treasuries, where they're going to be buying Treasuries there. And I think you know, there's risk to the downside also there if the Treasury, if the Fed decides not to put in as much as anticipated, or if there's conditions placed on the quantitative easing that we're going to see. So there's risk to downside. I think, you know, what we're seeing is cautious trading at the moment. Not a lot of players wanting to put money in there, especially South African players, because the decisions will come out only at 8:15 after our market is closed tonight.
Well, Ntombenhle, just looking at the way that the rand has been performing, and we are starting to see rand strength coming to the fore. Perhaps it's just the fact that we've seen dollar weakness and the euro dollar is sitting at above 140. You were talking about certain conditions that could be attached to the quantitative easing. We know that we're still seeing deflation coming through into the US. If we do see a target band perhaps being set out by the Fed when it comes to inflation, could that create some perhaps a dollar strength coming to the fore, or do you think that it's going to be we're going to see dollar weakness coming to the fore because of the quantitative easing? So obviously various scenarios that could play out. The question is, how is it going to be impacting the currency and equity markets going forward?
Absolutely. I think you know, what the Fed is going to be trying to do is to avoid deflation. So inflation, I think they will welcome a lot more than they would deflation, and also, you know, creation of employment. I think those are the two main drivers and the two main focus areas for the Fed through their quantitative easing. They're trying to sustain that, or to bring long-term sustainability in those areas. So I think going forward, we could see maybe if it doesn't work out the way that the market anticipates, we could see some dollar weakness, also some dollar strength actually. And if it does work out the way the market anticipates, yes, then it would be dollar weaknesses, and we'll see the rand strengthen, we'll see the gold strengthen, we'll see oil come up even further than it has already, and we'll see perhaps the euro starting to fight back. But we must also remember that the euro has got its own unique issues that they're dealing with, but we'll also see what the ECB has to say about the euro, and that will have impact on the European currencies as well as the European.
Well, that said, in Ntombenhle, I mean, you know, looking at the JSE All Share, we are above 30,000, and the US, the Dow Jones sitting at above 11,000. So equity markets doing quite well. Where do you peg the markets by the end of the year when we do see the second round of quantitative easing? Do you think there's more upside?
It's a tough call, really, because there's so much that will happen in between. But I think, you know, by the end of the year, if it is bullish, we may see the top 40 maybe reaching the 28,000 level, or perhaps if it turns out to be bearish, coming back down to about the 25,500 level. You know, I think there's a lot of factors that we need to consider. South African economy potentially could have a rate cut now in November when the central bank sits again, and that would impact on the perception of retailers in our economy, and foreigners love our retail sectors, so we could see a lot of rand inflows into the country, and also commodities. Should quantitative easing go forward, we'll see a great impact on commodities, and that obviously will impact our diversified resource stocks, and then see a very positive impact there. But there also is risk to the downside because we are dependent so much on what happens in the international arena, where there is economic data.